Live now to Melbourne, where Treasurer Josh Frydenberg's responding to the interest rate cut.
It will assist with faster progress in reducing unemployment and achieve more assured progress towards the inflation target. Significantly, the Governor went on to say employment growth has been strong and the central scenario remains for the Australian economy to grow by around 2.75% in 2019 and 2020. This rate cut will be welcome news for Australian households and businesses, and it will mean lower mortgage costs and lower interest payments. It is the government's expectation, indeed it is the public's expectation, that banks should pass on in full to consumers the benefits of reduced funding costs as a result of the Reserve Bank's decision. The impact of a 25 basis point cut on a $400,000 mortgage is the equivalent of saving around $60 a month or $720 a year. A timely boost for households facing cost of living pressures, and this will be in addition to the tax relief outlined in this year's budget, which will see those on incomes of up to $126,000 get tax relief up to $1,080. The combination of the tax cuts and today's RBA decision could see a two-income family, for example, a teacher and a tradie, each earning $60,000 a year, with a $400,000 mortgage, almost $3,000 a year better off as a household. I repeat that. The combination of the tax cuts outlined in the budget and today's RBA decision could see a two-income household of, say, a teacher and a tradie, each on $60,000 a year, better off by nearly $3,000 a year as a household. Today's decision and the Morrison government's tax cuts come at a time when the Australian economy is facing significant challenges both internationally and domestically. Escalating trade tensions are contributing to growing uncertainty in the global economic outlook, and the impact of flood and drought and fires and a softening housing market have weighed on the economic outlook here at home. This is why the Morrison government is implementing a pro-growth agenda with tax relief, the most significant tax cuts and tax reforms since the Howard government, a record $100 billion infrastructure spending plan, and an investment in skills with the creation of 80,000 new apprentices. These initiatives are part of our economic plan to create 1.25 million new jobs over the next 5 years to help strengthen the Australian economy to meet the challenges we face both internationally and domestically. Are there any questions? Well, I think the ANZ has let down its customers. This is deeply disappointing from the ANZ. We heard from Commissioner Hayne just months ago that the banks were putting profits before people. Actions like this don't give the Australian people any comfort that the banks have changed their behaviour. And as Treasurer of Australia, I have made it very clear to the banks that the public have a legitimate expectation that they will see the full benefits of rate cuts such as announced by the RBA today.
So does that mean that what the RBA said is rate cuts would you find employment more
Well, we want to see the other banks pass on the benefits of these rate cuts, and there will be rate cuts to mortgage holders. And the fact is, if you have a $400,000 mortgage and the banks pass on the 25 basis point reduction, that could be worth around $60 a month to you, or $720 a year. That's not an insignificant amount of money for people facing cost of living pressures. So the benefits to the economy from this rate cut will not be insignificant, but it is important that the banks hear the message from the Australian people that they should pass on the benefits of these rate cuts to their customers, to the Australian consumers. And in this respect, I think the ANZ have let down their customers.
Isn't the question of how much that should pass on? You've said that the benefits of a sustained reduction in costs, a 25 basis point cut from the Reserve doesn't necessarily reduce the funding.
Well, we have heard from the Reserve Bank Governor that there has been a reduction in funding costs for the banks. And as you know, banks raise their money from a whole series of sources. They raise it overseas, they raise it from deposits, they have seen a reduction in their costs. And indeed, in my conversations with the bank's CEOs and chairmen, they've made it clear that some of their funding costs have come down. So this is a 25 basis point reduction. It's the first movement in around 3 years. And so in that sense, it is significant. But we would expect that the Australian people would see the benefit of these reduction in rates and the decision by the RBA, and I'm very disappointed in the decision by the ANZ today.
Just on those rates as it is now, Joe Hockey considered 3% an emergency level, so 1.25%, I mean, is that a sign of economic ill health?
Well, we think the fundamentals of the Australian economy are sound, and indeed you've heard from the Reserve Bank Governor today. He said employment growth has been strong and the central scenario remains for the Australian economy to grow by around 2.75% for 2019 and 2020. That was the comment from the Reserve Bank Governor today in their statement. But what we've seen in the Australian economy is more than 320,000 jobs created over the last year. Indeed, in the last month, we saw 28,000 jobs. And over the last year, 8 out of those 10 jobs have been full-time. And as a coalition government, we've helped create 1.3 million new jobs. So we've seen very strong employment growth. We've also seen non-mining business investment being solid. We've seen Australia maintain its AAA credit rating, one of only 10 countries in the world to have a AAA credit rating from the 3 leading agencies. We're in our 28th year of consecutive economic growth. We have entered into new free trade agreements with a whole series of countries, and I think it's one of the great successes of the coalition government. Obviously the China, the Japan, the Korea free trade agreements, most recently Indonesia and the Trans-Pacific Partnership. And with 1 in 5 Australian jobs being related to trade, these free trade agreements entered into by a coalition government have created new opportunities for Australian businesses and for Australian jobs. So the fundamentals of the Australian economy are sound. But what the Governor has made clear today is that they can provide this interest rate cut as a means of driving unemployment even lower without raising inflation concerns. But the focus for the coalition government, for the Morrison government, is our pro-growth agenda. And we will continue to push ahead with the tax relief, which should be passed by the Australian Parliament, indeed by the Labor Party in full, and our $100 billion infrastructure package, as well as our plans to create 80,000 new apprenticeships. Well, firstly, I think that's a ridiculous statement, to be honest. The media, the fourth estate, you need to respect them and respect their independence. We were successful in this election because the Australian people could identify with our message about creating a stronger economy, with our the fact that we've created over 1.3 million new jobs, and because Bill Shorten and the Labor Party were persisting with a high taxing, high spending agenda which would have led to a weaker Australian economy. As for those matters that you raise, with investigations still underway, it would be inappropriate for me to comment on the specifics.
Treasurer, can I ask you another question just about the passing on of the cut? I'll leave it. It's 25 basis points. Are you saying no ifs, no buts? You expect the full 25 bps to be passed on?
I do. But again, the banks are businesses, and they're answerable to shareholders, and they're answerable to their customers. And in the case of the ANZ, they have to answer to their customers and those mortgage holders as to why they haven't passed on in full that rate cut. You see, the Morrison government is on the side of the Australian people. We're not doing the bidding for the big banks. The big banks have to explain themselves. And after what they've been through with the Royal Commission, you would expect that the banks were more sensitive to the Australian consumers, to their own customers' concerns. And when the Reserve Bank government makes it very clear that bank funding costs have come down and that they're making a decision to reduce rates by 25 basis points, there is a legitimate expectation that this rate cut is passed on in full to the customers of the banks. And I think in that case, the ANZ have a lot of explaining to do to their own customers.
Last question. Your message to the G20 meetings, what's your message to Australia's economic partners?
Well, I'll be meeting with my counterparts from around the world at the G20 meeting in Japan, and including with the US Treasury Secretary Steve Mnuchin, who I spoke to not that long ago. We'll be seeking in those discussions to understand what's some of the trade issues that you've seen develop globally, which are creating uncertainty, which have impacted trading volumes, and to better understand how some of the other countries are dealing with the economic challenges that they're facing. Many of the other countries within the G20 are also dealing with low domestic inflation environments, and it will be interesting to have a discussion about global trade tensions, the impact of Brexit, and of course to exchange notes on what's happening in our own domestic economies. There's also good opportunities for working with other countries on a whole range of issues. For example, the multinational tax agenda, the base erosion profit shifting agenda through the G20 and the OECD will be something I'll be discussing with my counterparts, and the impact of the digital economy and the issues around that. So there will be plenty to discuss with the international trade tensions, the global economic environment, which the IMF and the OECD have said essentially is at a delicate point, and also the multinational tax agenda as well. Thank you very much.